Hey everyone, Christian Tharp here, and I can't thank you enough for tuning in as I debut Paragon Options, which is my live lotto trades. I call these lottos simply because we're hunting down trades that could have exponential returns in under 24 hours. Now, that doesn't mean we win them all, but at one specific time of the week, there's an opportunity to find these trades that have the potential to return 400, 600, 1,000, and yes, even 4,000%. Now, what I'm going to do is I'm going to run through these trades so you can see exactly what I'm talking about. I'll show you what I was seeing, why it worked, and how I evaluated my risk and reward in them. By the end of this presentation, you should be able to put this strategy into action for yourself and position for those windfalls come every Friday. Because 20 plus years as a professional trader has clearly shown that the buy and hold strategies so sought after by institutions are what tend to cripple the capabilities of the average traders. You see, you tie up your capital in hopes that a stock rallies for months or years to come, right? You put your hard-earned money into the hope that that company reports good earnings or hits some positive news or some catalyst. And you just hope that everything goes according to plan. Well, over the course of a year, can you really predict everything that would influence that stock price? Obviously not. And even then, take a look at the best performing companies here in the S&P 500 throughout all of 2022. Only one company delivered over 100% for the year. So while you could have tied your money up into that one stock and doubled up your position, which of course, don't get me wrong, would be looked at as a phenomenal return in my mind, you lost out on a ton of much bigger opportunities, and you took a massive gamble. See, take those trades I mentioned earlier, 400%, 600%, 1,000%, 4,000%, all of those happened in less than a day. We're talking about a matter of hours where a $1,000 investment could have turned into $6,000. Another 1,000 could have returned $10,000 and another $40,000. But if you put that $1,000 into the hottest stock of all of last year in the S&P 500, you would have returned just $1,190 on a 365-day hold. Now, I'll tell you something right now. It's a heck of a lot easier to predict what a stock may do in less than 24 hours than what it would do over the course of an entire year. I mean, don't you agree? So, but now you're probably thinking that this strategy must take an absurd amount of risk, that these are extreme returns and you're unlikely to ever hit something like that. Well, of course, in all fairness, yes, they are extreme returns, but is it an absurd amount of risk? Not so fast. You see, the market is all about risk to reward. When you make any trade, just like these trades I'm going to show you today, you could lose everything in that trade, and there's obviously no denying that. Nothing in trading is guaranteed. And if you don't know that by now, I might have to ask you to go ahead and leave. All right. You should be here because you understand risk, but are looking for a way to maximize the returns on that risk. And for that, the philosophy is pretty simple. Within each position you take, you should be evaluating the reward. What's the real opportunity? Let's say if you have $1,000 to put into a trade, and based on what you're looking at, your stop is 20% lower, but the opportunity or reward is 10% higher. Would you consider that a good trade? Is the risk of 20% of that position worth the potential to make a 10% win? Now, how about a $1,000 position in a trade where you could lose 100%, but there's 1,000% opportunity on the table or reward, maybe even 2,000%? Is the risk of 100% of your position worth the potential return of 5x or even 10x? That's exactly what I'm going to break down today, along with how and why this strategy should be used every single week. Like I said, my name is Christian Tharp. I found my way into the stock market way back in the early 2000s, 2001 to be exact, after working in home improvements and real estate. Now, I'm one of 4,500 chartered market technicians, or CMTs, in the world, and I have used that experience to work with multiple stock and option trading companies, and I've developed my own business to help others navigate the market. From larger institutional investors to those managing their retirement funds and others looking for supplement income, I've worked with all kinds of people in more than 30 countries all around the world. What I found is that the people that come to work with me are those that are tired of the gimmicks. Okay, they're tired of the get rich quick schemes and the buying the hype of some quote secret pattern, right? Secret strategy. They're fed up with the marketing. They just want real answers. How do I pinpoint trades that can yield exponential returns in a short amount of time? Why do I think the stock is going to move? How do I capitalize on that move? What option contract will give me the best opportunity? In other words, the answers that actually make someone some money in the market. Because at the end of the day, there is no secret pattern or indicator. It doesn't matter if someone is using 4, 5, or 10 indicators. It doesn't matter if they're using the VWAP. It doesn't matter if moving averages, order flow, volume, or any combination of all of them. None of that actually matters. You see, all those forms of technical analysis just give you a setup, okay? A setup that you have been made to believe is a, quote, great one. But setups are very low on the totem pole in the way of importance. We can do whatever we want. We can trade however we see fit. Candlesticks, we can trade anything, okay? Bollinger Bands, you name it. But at the end of the day, it is just a setup since there's no such thing as 100% winners. With all technical analysis, we're still going to be wrong sometimes, okay? We know that. The reality is no trader ever made money in the market based on the setups, okay? But there is one thing that really does matter in the market, and that single thing is price. That's how I find these massive moves we're talking about with the potential to 10x or even 40x my position. It's not by taking someone's random advice about the perfect blend of technical indicators that yields returns unlike anything you've ever seen. It's about, yes, keeping it simple. And I'll go back to one thing before we dive into these trades. I apologize if I get too long-winded, but I notice people overcomplicating the market and making careless mistakes because of it. A lot of times, I see people hyping up some win rate as an example. That's all they can think about, the win rate. But if you're only thinking about win rate, you have a lot to learn, to be quite honest with you. I always say that's a rookie metric, okay? Anyone can go in and find, I don't know, some out of the money credit spreads or something and win time and time again. In other words, it's not hard to get an 80 or 90% win rate, but you can still get wiped out and you're risking a ton of money to make very little, right? That's not the reward you should be looking for. Think about gambling. I mean, are there any gamblers here today? Okay, you could have a 90% win rate betting on huge favorites. I'm talking betting lines of 1,000 or more. So yeah, you could just risk 1,000 to win $100 over and over and over again, right? You sure could, but it can still backfire on you. And if you made 10 bets and just one of those lose, you're back to square one, right? So that's the problem with high win rates. You tend to be risking a lot. That's not a good use of your time. It's not a good use of your money. And trading that way doesn't even make sense either. Because you'll also have people saying, well, I set my stops at 20% or whatever they want. And you might think, wow, they're managing risk very well. Okay, but what if they're only making 10% on the wins, right? Same idea here. Risk management doesn't look so good now, does it? That's why I use price and determine the best trades that can deliver the highest returns with the risk that I'm personally willing to take. And with this strategy, that's what it's all about. There's no sugarcoating anything, all right? I'm going after trades that can be 5, 10, 15, even 40 times my position in under a day, and they're not all winners, okay? That's impossible. But it doesn't mean we don't go for them, we don't get our fair share. But if I take a big loss, I'm backing that up with trades that are returning bigger wins than my losses ever have added up to, and I come out a huge winner in the long run. That's what I'm here to showcase for you today. So here it is. Let me walk you through my trading blueprint for Paragon options and how I can find these trades every week. All right, hello everyone, and welcome to this tutorial. My name is Christian Tharp. I am a chartered market technician and technical analyst. And this tutorial, we're going to talk about lotto plays. And if you're not familiar with them, I'm going to try to pull back the curtain a little bit on the lotto plays that I like to put on in the services that I manage. If you are not new to lotto plays, then maybe I give you a couple little tips on the way that I look at them or when I put them on. But first, before we get going, I always like to lay some basic groundwork when I discuss this particular topic. First and foremost, when we talk about lotto plays, okay, this should be house money, right? These are long shots. These are the trades in which we're aiming for the real big gains, very, very short time duration, usually next day expiration. And these are trades that if they go against you, you're probably going to get wiped out. But if they go well, I'm going to show you some of the trades we put on here recently, and even our biggest trade to date, which was a 4,000% winner. But unfortunately, most of them don't work out. All right, so you do want to keep that in mind. This shouldn't be implemented as a as a core trading strategy of any kind. All right, so that's first. Next, when we put these trades on, we do not try to guess. All right. I've had so many members that love the lotto play, and they try to implement them themselves, and what they end up doing a lot of times is just guessing and hoping. So for me, at least, when I decide to put a lotto play on, the idea is this is something that I think could realistically work out. It's not necessarily a high probability trade, but we see that the environment is right for this to work. All right. So again, if you decide to implement these types of trades, don't guess, don't waste your money. We don't literally want to gamble and buy a lottery ticket here. We want this to be realistic, okay? With that being said, when it comes to the lotto plays I put on, first and foremost, I always start with the market. All right, if we can get the market right, that's first and foremost. When the markets opened higher right out of the gate at the time of this tutorial, it opened up higher, pulled back, and then ran back up again. When markets opened higher, virtually 90% of what was in my list was green. And even now, after the market closed being up 2/3%, most of the stocks in my list are green. So we do want to make sure that when we put these on, we want to look at the market first. We want that to be some sort of a starting point. If I don't have any kind of view on the market, then I don't put on a lotto play. But if I have a very strong bullish or bearish view, then that's when I might start looking. Okay, so look at this really nasty day here on the S&P. I would have thought lower. Sure enough, we did go lower at least for a little bit, right? And then after this day, we thought higher, and sure enough, we got it, right? So we want to make sure we start there. Now, if we do have that kind of a view, and then we are going to start looking at individual stocks where, because of their volatility and because of the option premiums, we believe this is a trade that can work out, okay? So before we get into the trades, I always like to lay this kind of groundwork so we know what we are referring to. We know that these are low probability trades. We know that this should not be a core trading, style for sure. This is going to be a small position size. This should be money that isn't rent money. We also know once we do decide to look at putting a lotto play on, we are going to look at the market first. So even though with these trades, I'm not going to break down the market every single environment that we were in for these trades, do know that it always starts there. So I like to lead this tutorial by discussing the big one, the big 4,000% winner we put on. And we will never forget it because obviously, one, it was pretty big. It was the biggest trade we had ever put on. And this one was unique in that it wasn't a next day expiration trade. Actually, we put this on Friday and we called it one of our holdovers, a trade that went into the following week. And it just turned out to be a great lotto. It was a lotto play, but it was the following week's expiration, which was somewhat unique that we put on. Usually we put on these trades on a Thursday late afternoon. Okay, now I want to show you this trade, but again, full transparency, and I like to be honest, okay? A lot of Twitter hacks out there and YouTube gimmicks where a lot of stuff is made up, or if the trades are legit, they only show you the winners, right? They never show you the reality of the trading and such. So I want to be clear. This was the one time we just knocked it clear out of not only the ballpark, but 10 ballparks. Most of our trades are going to be something in the 500 to 1,000% type winners when we get them right. Sometimes we get in the 1,000 to 2,000%. And when we're wrong, I'm not going to waste your time with losers because we simply get wiped out. Again, put yourself in the position of a late Thursday afternoon trade that doesn't go the right direction on the Friday morning. You are probably wiped out. Okay. Now this trade here, this was a trade in Marriott, and you may remember the nasty little COVID crash. Okay, so I'm going to zoom in. That's what was happening here. And I don't really need to go to look back on too much because I remember this trade so well. This was the day we put the trade on, and I'm going to bet a pretty healthy chunk of change. This was a Friday. Now, our belief was the market had put in a low. You can even look at Marriott here. Look at this huge hammer candle. Nice rally. Our thought was there was reasons to believe when you combine the price action with certain momentum indicators that this was not a low. This was not going to exceed this low. Now, we were looking at the market here, and our belief on that Friday was the market was going to rally and had found a little bit of a bottom after this pullback. All right, so on that Friday, we ended up putting on not one, but two positions in Marriott. One, we simply bought, both of them were the same. We bought the 70 calls, just two full positions. Why? Because they were only a quarter. Okay, it's 25% trade, right? Even 10 contracts is only $250. Most of our trades are bigger than that. And so we said, if this works out, why don't we just go ahead and put two positions on? That way, if it does work out, we can close out one and let the other one run. Okay, now remember, we don't know this happens. This is the day here. And, to be honest, the way Marriott closed, we weren't terribly thrilled. Okay, we couldn't wait to the last minute. We had to put it on closer to 3:30, and Marriott looked a little better at that time. So we actually left Friday thinking, maybe Marriott's going lower, even though it looks like the market's going higher. We ended up obviously being wrong. Okay, the stock popped on that Monday. Okay, and so immediately we closed out the first position for $3. Okay, now as a member, we're sending these sell limits out ahead of time, or this guidance. So we had already said, hey, look, it looks like the stock is going to pop. Notice where it opened, right? The stock opened around the $65 area. So we see this in the pre-market. We see the stock's going to open up higher. So we want our members to be prepared. And we had the sell limit set. Obviously, it got filled pretty quickly at the $3. We ended up taking around 1,100% off of that first position. And now we're in the driver's seat. So we figured, we'll see. It looks like this looks great. Looks like it's going to run higher, right? Let's go ahead and let the other position run, see where we're at. Next morning, we could tell we were going to pop again. Could we get another $10 here? Well, we set a $10 sell limit just in case. And as you can see, it got filled. All right. So that second set of options end up being a 4,000% winner. All right. It's the only time we ever hit one that big, so I'm not going to try to fool anyone to thinking that we hit these all the time. But what I do want to show you is when you do your homework, we were right about the market, we were right about the stock. It was an inexpensive, low probability, but high potential win trade. And as you can see, we don't need to hit too many of these, for it to be worth doing. Okay, we expect and/or hope to get, 1 to 3 out of 10 right. Okay, our hope is that we get 1 or 2, preferably 2, that are in the 400 or 500% or more. If we do that, we're profitable. Anything above and beyond that is gravy. This 4,000%er obviously did all of that and then some. Okay, so this was our biggest trade. Okay, and I just want to show you the potential. Why am I showing you this trade? Because I want to show you the potential. Okay, we do get wiped out most of the time because we are putting these on a Thursday late with the Friday expiration. So if it doesn't go well, hey, but we're also talking about 25-cent, 30, 50-cent options, that these are things we expect to turn into multiple dollars and 5 or 10, okay? So if you want to see the potential, there you go. But let's talk about more the run-of-the-mill trades, okay? The ones that could really be what happens on a week-to-week basis. Now, again, I don't put any trade on, any lotto type play that I don't believe has the potential to work. I'm looking at the market, I'm looking at the stock, and I'm saying, I think this could work, this could happen. I want it to be inexpensive, right? We need it to be. It's very difficult to turn $5, into $50 from a, Thursday to just a Friday. So they're going to be inexpensive. So it allows everyone to take part, right? One contract is $25. right, on a 25-cent option. 2 contracts is $50. Okay, so allows everyone to take part. So let's take a look at Tesla. This was a trade we put on. I'm going to show you just a trade. We've had a few that worked out, some that didn't, some ideas, so forth and so on. But we're going to focus on here recent. You know, at the time of this recording, you may be watching it later, but at the time of the recording, this was a trade where we don't do this too often. But if we see what appears to be a possible earnings play, okay, they don't provide very often. Why? Because premiums are elevated. But if we see that there's a possibility for a long shot here, we will take it. So Tesla's earnings were back in July, all right? And we put this trade on. This is the 19th, all right? Now, why do we think the environment was ripe here? Well, look at this rising wedge on Tesla. I mean, obviously, I'm a technical analyst. For me, everything is about technicals. This implies a breakdown. The day of earnings, not the most bullish looking day in the world. So we decided to take a shot, okay? We ended up buying the 260 puts down here, okay? We thought there was a shot that we could get down there. Just looking back at previous Tesla earnings, looking at how earnings were going, we thought, now remember, we're not putting this on with important money. We realize that, you know, probably won't work, but everything's lining up where it could. Right? It was only 40 cents. We put the trade on, and this ended up getting closed at $4.40. Okay? Not too shabby. 1,000% winner, right? We'll take it. All right? All it takes is one of those out of 10, and we're profitable. That's it. Okay? Anything above and beyond that is gravy. Okay? And if I remember correctly on this day, we had another lotto that didn't work out. Who cares? Okay, who cares if you lose 100% if you're making 1,000% on the other? All right. So another big winner for us recently. Now let's look at some ones that are, again, I want to show ones that are more run of the mill. Okay, which when we get them right are going to be more in that 500, 400, 600% type range. Okay. We do take smaller winners too. Sometimes we don't have a choice. Sometimes we end up with a 1 or 200, 300% type winner. But I tend to look at those as losses. Why? Well, because remember, if I'm only going to get 2 or 3 out of 10 right, 200% winners mean we're losing. Okay, so you want to keep that in mind when you put it can be very tempting to take a 100 or a 200% winner and think you just ruled the world, right? You're Jack on the Titanic, king of the world. No, all you really did was lose. Okay, we can't win that way. But sometimes the market puts us in a position where, all right, well, I guess we don't have a choice here. We'll take the 200% gain because this isn't going to work. All right, so we do have smaller ones as well. All right, but let's take a look at Lulu. Okay, now this is a trade. This was also one back in July here recently. Okay, a lot of consolidation. I'm going to zoom in so we can get a closer look. All right, this was the following week, and on the 27th, okay, Lulu was falling. You saw the pink line I had here. We knew 370 was an important level. Now, I'll be honest with you. Had we known Lulu was going to close so badly this day, we may not have bought the calls that we did. But the stock had come down, started to rally off this, and we thought, hey, let's go and buy calls now. Maybe the stock is going to bounce and run back up. Who knows? I mean, not clear back up here, but certainly we could get a pop back to 375 or 380. That's exactly why when the stock was here, we bought the 375 calls, right? So remember, this is a Thursday. We're coming down towards the end of the day. We're starting to bounce. We're like, hey, let's be in the game if this thing does follow through and bounce higher. We bought these 375s for 35 cents. Okay. And again, had we known it wasn't going to be as good a close, we thought we'd get a little more bounce. Didn't quite happen, but as you can see, the trade still worked out. Now, we only end up closing this out for about $2.45, I believe. Not a bad gain at all, right? Still around 600%, 500-600%, okay? But that's how easy it is for it to work out, okay, when you put these lotto plays on, as long as you have done your homework, right? We didn't pick 390 calls for a reason. Those weren't realistic, okay? We didn't buy puts because we thought we'd get a bounce, right? So notice how it's not guessing. We're putting ourselves in a position where, yes, it's a long shot. Yes, it's a low probability, but there's reason to believe this can work, right? Now, Speaking of earnings plays, we did another one here on Square, so let's narrow it down. Square had a real nasty run, continued to fall, was falling into its earnings, which you can see now ended up being this. Now remember, we don't know that that happens, but we thought, man, if this thing keeps going, 65 would be our target. If this thing has a nasty earnings, down 10, 15, 20%, some puts here could really work out. Remember, we want them to be inexpensive, which is why we ended up buying the 65s way down here, and they only cost us 30 cents, right? So again, imagine that you're a part of one of my lotto trade services, right? Or you're a part of a service where I'm putting on a lotto. We're watching the stock fall and fall. We're thinking the market might fall too. All of this helping with earnings for a shot. We need it to be big, but it's a shot. So we buy the 30 cents right here, the 65 puts, and as you can see, this paid off very, very well. We could have made a lot more. We ended up closing out for $1.50, which again, not too bad, 400%, just 2 of those out of 10, and we at least are breaking even. Okay, and these are more run-of-the-mill when they work out. Okay, great. We have some 2,000 percenters. We have a bunch of 1,000 percenters. We have the big 4,000 percenter. We go our whole year just to get a handful of those. Remember, just one 2,000 percenter. All we need is one out of the entire year, and think about how many trades we just paid for. Okay, we paid for months of lottos with one trade like that working out. Okay, let's look at a couple more. I just want you to kind of get an idea. Okay, what do the losers look like? Wipeouts. Yeah, they went the wrong way. That's it. You're wiped out. There you go. What I want to show you is the ones that do work out. Okay, we're going to lose 100% on all the losses. That's easy. Okay, and we're going to lose more often than we win. There you go. Full transparency. But we're going to focus on getting that 500 to 1,000% when they work out, and trying to make sure we're doing our homework where we can get 2, 3, who knows, maybe even 4 in a stretch. Right, so let's look at NVIDIA. This was here just recently, just a couple weeks ago. Okay, go back to August 10th, right here. Okay, market moving down. NVIDIA breaking level after level. Okay, we had come down to 420, and our thought was, man, 420, if we don't hold that, we had reason to believe if we didn't hold that, we could test 400. Now you can see we didn't get there on Friday, but we got close enough to turn our 410 puts at 60 cents into $3. Okay, another 400% winner for us. Okay, followed through on Monday, almost got to that 400. We thought we could get it here. We thought this could be 1,000% winner. As I stated earlier, I don't put it on unless I think the potential for 500 to 1,000% is there. And hopefully you can see how it was. The stock had already fallen over $20 a day before, okay? Got squashed on the Thursday. Is it possible to fall another 20? Well, if you know NVIDIA, heck yeah, that thing can definitely fall 20 bucks. Even when we fell 15, we're crushing this thing. We did fall enough. We got down to 406. Okay, we did get enough. We didn't get that whole gain, but we closed it out at 3 for a nice 400% gain. Okay, easy stuff here. Okay, look at the market. What do you think the market's going to do? Okay, great. Higher, lower, great. Let's go find some stocks that are moving. They're volatile. And if we're right with both the market and the stock, we could really knock it out of the park here. That's it. Pick the right options. Be realistic. All right. Last one we'll look at here, and then we'll look at one we just put on just this past week expiration. This was Amazon. This was just a couple weeks ago. We'll narrow it down again. This was just on August 17th. And again, you may be playing this months after we did this, but it's all wash, rinse, repeat. And that's why I'm showing you a trade or two from every week for well over a month. So you can see it's just, we don't always get it, and these don't always work out. Sometimes, we had other, to be clear, we had other lottos across this stretch that didn't work out. So I don't want to lead you to believe that every week we put on one lotto and it works, one lotto and it works. No, we might put on 2, we might put on 3, we might put on 1. Okay, so I want to be very clear on that as well. But Amazon, right here, okay, on the 17th, you can see Amazon, we kind of liked this level. It had broke. We came down on the 17th, we were following through, and our thought was this stock not only might be coming down to its 50-day, but we thought 130 was a chance. if the market kept giving it a push. But we really liked coming down to the 50-day at this point, which is around 131. So we bought the 134 puts on this Thursday. They were only 40 cents. As you can see, we got a nice fall, a big enough fall. We were able to close this out at $2.40. It cost us 40 cents. It was a nice 500% gain. Not too shabby, right? Now, just a couple days ago, actually just one day ago, okay, we had NVIDIA. Now, we had two lottos. One did not work out. That was on Netflix. Okay, let me show you both. I'll show you both since it's fresh in my head. Netflix, right here. Okay, this was the Thursday. We took a shot at the 400 puts. Didn't work, but they were only like 40 cents. What did work is our NVIDIAs that were only 30 cents. Okay, remember where the stock is at. NVIDIA was way up here on the Thursday. We thought there was a shot at getting to 450. We knew this 450 had already been support and resistance. This was a nasty day after earnings. Nothing about that looks good. Market looked just as bad, right? Look at the market that day, right? S&P had went up, hit its 50-day. Look at that nasty reversal, right? Real gross. So we believed market going lower. We bought the 450 puts. They were only 30 cents, okay? The puts reached as high as $3. We closed them out for $1.80. Would have liked to have got the whole $3, but it was taking a long time to get there. We didn't open down there. We opened higher and just kept falling, falling, falling. Again, a great gain though. We were 1 for 1, still walked away, right, with a net of 300% here, or 400%, I believe. Okay. So today, all right. So a couple things wrapping it up here. These lotto plays, they're great. They're the most popular trades I get asked for across the services because they're fun, they're inexpensive. The traders that I work with that trade them, they're very good with their position size and money management, so they're not getting wiped out the next day. And they're grown, they're adults. They know if they put these on, they get wiped out. Hey, they knew the risk when they got in, but there's nothing feels better than when you knock that 500, 800%, 1,000%, 1,500% winner. Okay, so they're a lot of fun to put on, especially when you do it right. And we actually profit with the lottos. Okay, and the reason for that is because we pay attention to the market. Some weeks we don't put any on. We don't like what we see, but we pay attention to the market. We do our homework, and we try to give ourselves the best chance possible. All right. So, give them a try yourself. See what you think. But again, don't guess, don't gamble, and don't use money you can't afford to lose. All right. Hopefully this has been insightful for you. Hopefully, if you're not familiar with lottos, hopefully this kind of gave you an idea of maybe a little income generator here. Just play around with a little bit, one contract, but no matter what, hey, good luck to everyone in their trading. See you on the other side. All right, so sorry for any technical difficulties there as I flip back over to the presentation, but I just want to recap everything. I've traded these lottos for ages. Of course, that 4,000% win on Marriott really did get me going, as it would for anyone. And traders I work with who caught that move, they wanted more. They said, we want more of that, we want more of that, which is why I turned it into a weekly strategy, and I showed you what compounding weeks can do. Take the 5-week period with the trades I detailed from July to August. 1,000% on the Tesla puts. The next week, remember the 600% on the Lulu calls? And then I followed that up with the 400% on Square, another 400% on NVIDIA, and 500% on Amazon. That's why this strategy has so much demand. Now, of course, again, I want to repeat, we don't win on these trades every time, far from it, okay? But the goal is to find these big winners that help offset the others. That's just a part of the trading. The reality is that there is an undeniable opportunity and no reason why you can't apply it to your own trading. And if anything like my members, you're interested in getting these plays sent to you every single week. So here's what I'm going to do. With Paragon Options, I'm going to give you an all-access pass to trade these lottos with me for an entire year. All right? Each week, I'll be going live on a video call with you, just like it looks today. I'll walk you through my #1 lotto of the week, and that's going to be at 3 o'clock on Thursdays. I'll take you through the market, what I'm seeing, and we'll be looking to put on a lotto trade right there in front of you, okay? I believe in full transparency right in front of you. If I'm not putting my real money into the trade, then why should you trust me? And I want this to work for you, which is why the live video call is there so I can help educate you on exactly what I'm seeing, right? Help you in your own trading. I'll of course send out an alert, okay? But I find that the video really drives home the overall strategy. The plan is to set our profit targets during that call as well, okay? And if you're not happy with it, you'll get a refund within the first 60 days, no questions asked, all right? Now, you might find services out there offering this type of commitment, but they'll be charging you thousands of dollars. Well, assuming this is the first time a lot of you have met me, which it probably is, I find it hard to believe that you'd be willing to throw that type of money my way, even when I personally know it's worth it. So for all attendees that are here right now, I'm not going to offer it anywhere close to the typical retail price, not $1,000, not $500, not even $100. Believe it or not, for just $49, I'll give you the entire year of access to my Paragon options, okay? That's a video call every week walking you through each trade, and that is less than $1 per week, okay? In other words, $1 a trade, that's all you're paying. The price probably seems too good to be true, but in the industry full of people overcharging, overpromising, and definitely under-delivering, I'm trying to go against the norm, okay? I'm not here to take advantage of anyone. And I'm also not here to hard sell you on anything. I don't even think I would need to with a price of $49, okay? Like I said in the beginning, my members are people that are fed up with the nonsense. They're fed up with the marketing gimmicks and the overpriced services that leave them high and dry once they do sign up, okay? Trading is my business, and if I'm able to help people along the way, that's truly what matters most to me, all right? So if you don't think that 52 live trading sessions and 52 lotto trades are worth $49, then, I really don't know what else to tell you, okay? That's about 26 hours worth of time throughout the year that you'll have a chartered market technician broadcasting his real-time account and walking you through the #1 lotto play of the week, all right? The full game plan gets laid out so you know exactly what to do. I make the same commitment to anyone that joins my services. I will do everything I can to help you reach your goals. Again, if for some strange reason you're not happy with the service, you can request a refund at any time within your first 60 days, no questions asked, okay? Because at the end of the day, look, a good service is worth the investment, meaning that if it costs just $49 for the year, then you should be offsetting that with trading profits for it to make sense. So the real question here is, do you really think you won't make more than $49 with 52 live lotto trades throughout the next year? Really? That question should answer itself, right? So let me get to work and prove to you that I will over deliver on a weekly basis for you, okay? Then you make the call. If you're not ready to join, there are absolutely no hard feelings. I wish you nothing but the best, and I truly do thank you for being here with me today. If you have any questions, just feel free to respond to my emails and I'll make sure they get addressed, every one of them, all right? Now, for all of those that I can see joining right now, I cannot wait to get you started. Over the course of the next year, I believe this is going to be the most impactful service you've ever joined. I'll make that clear from our very first video call today. Mark it on your calendar, all right? Thursday, 3 o'clock Eastern, I'll see you live. Thanks again to everyone that showed up today. I'll talk to you soon.